So you've been doing all you can to get your credit back on track. Or maybe you're new to just building your credit. One thing for sure, you know you need credit to get good financing to make big ticket item purchases. Maybe like many, you've wondered what needs to be done to level up on your credit score and wondered what steps do I need to take next. In today's segment, we're going to talk about the components that impact your credit score most, so you know where to focus when you're considering building your credit score back or just building your credit score. I'm your host, Crystal, on Finance on the Go. If you haven't done so already, please hit the subscribe or like button to stay connected to this channel as we discuss finance tips as you are on the go. In today's segment, we're going to talk about the 5 components that impact your FICO score. And also, we're going to discuss some best practices for building your credit score. Let's get into it. So there are certain payment habits that impact your credit score, your FICO score, if you will. And I have them broken down for you, and I'm providing a breakdown for you today from highest to lowest, from highest impact to the lowest impact. And then we're going to end the segment by talking about some of the best practices to build your credit score. These practices I've done myself to build my credit score, and sometimes you learn from mistakes. And I'm here to share some tips with you today. The number one component that impacts your credit score is your payment history. Now, this impacts your FICO score for approximately 35%. I want you to think about your FICO score as in a pie chart, and that certain things impact your score by different percentages. And so payment history, which is a 35% impact on your FICO score, it entails the length of your credit history and the timeliness of you making payments or you not making payments. So that can go up or down based on that. And so for this component, I want you to think about your lifestyle and your habits. If you're one of those people that you like to go in and pay every single payment manually each month, even though it may not even change from month to month, then you can stick with that particular payment habit. However, if you're the type where, certain factors in life may impact you making timely payments, and you may have or have had some mishaps or some missed payments here and there, then you may want to consider scheduling payments. And so this is work for me to schedule out my payments, because sometimes circumstances happen in life and you get off focus and you miss a payment, and that one missed payment can negatively impact your FICO score. So I say change things to fit your lifestyle and fit your habits the best way that works for you. The number 2 component that impacts your FICO score is credit utilization. And so there's an inverse relationship between your credit utilization and your FICO score, or rather, the lower you've used your credit, the higher your FICO score can be. When you've used less of that total limit balance across all of your accounts, the higher your FICO score is going to be. Now, this may make you think, okay, well, maybe I should have a bunch of credit cards so I can have a high limit and only use a little amount. I want to caution you to not do that, because the more inquiries you make on your account, or the more you pull your credit, the lower your FICO score can be. It's going to negatively impact your FICO score. Before you take out credit, you want to kind of do your due diligence and look online to see what rates are being offered. And you don't want to pull your credit multiple times, because this will negatively impact your FICO score. So you want to be very careful about this. But instead, if you really want to increase your FICO score and impact your credit utilization, work on instead paying down those balances that you already have for things you already need instead of opening more accounts. The number 3 factor that impacts your FICO score is the credit history length. Basically, the longer you've held credit and, of course, paid those balances off, the higher your FICO score can be. The number 4 impact on your FICO score is credit mix. Okay, this is a 10% impact on your FICO score. So it is based on the diversity of the portfolio of your credit accounts. Now, we have different types of credit. We have installment and revolving credit. So installment credit are those credit accounts where you have that fixed amount. That's your mortgage, that's your student loans, for example. And revolving credit, we're talking about credit cards and some home equity loans. And so again, that makes up 10% of your FICO score, how you pay and how you have your mix and how you pay down those different types of accounts. Number 5, new credit inquiries. So basically, the more you pull your credit again, that impacts your score by 10%. And so I will caution you again, don't do it. Don't pull your credit multiple times trying to get the best rate. Again, shop online beforehand. They'll tell you what rates they're offering. You kind of know where your credit score is. So you should kind of know where you would end up to not negatively impact your credit score and shoot in the dark by pulling your credit to get financing. And number 6, best practices to build your credit up. Pay what's due before it's due. Make your payments on time. This is how you beat interest. This is how you beat fees. And it's the best way to keep your credit on track. B, schedule payments that are due. So earlier in this segment, I said that this is a method that works for me because sometimes distractions in life have prevented me from making timely payments, and that's negatively impacted my FICO score. And so if scheduling payments works for you, and I would say go ahead and do that as a method of payment. C, just say no to multiple credit cards. It may be tempting. You may be in your favorite store where they're offering another 20% off on top of the in-store 50% off, and it sounds like a great deal at the time. However, again, the more you pull your credit, this can negatively impact your FICO score. So think about things in terms of long-term. You want to think about long-term, building your credit, what's going to benefit you more. And so what I would say instead is for you to ask the cashier, hey, do you have any other coupons? And what I found is that they'll happily give you a coupon that they have behind their desk, and in addition to whatever the sale is that day that you can use, instead of you opening up another credit card and pulling your credit and impacting your FICO score. And D, protect your credit. So again, in the segment titled Rethinking Debt, I talked about several methods that you can do to protect your credit. So when we talk about building your credit score, it also involves protecting your credit, monitoring your credit, or you can do that in several ways. Make sure that there's nothing on your credit that you didn't put on there yourself, because those things are going to negatively impact your credit. Again, you can report any fraudulent actions to the credit agencies. However, you want to prevent fraud before it happens, prevent use of your credit before it happens as best possible. And I go into detail about that in the segment titled Rethinking Debt. I hope that discussing the credit breakdown and the 5 components that impact your FICO score today have been helpful for you. And I hope to see you next time on Finance on the Go. And feel free to leave some comments and feedback in the comments section, and I will see you next time.